Welcome to the deep dive. So if you've been watching the markets at all, this AI explosion is just impossible to ignore.
Absolutely. I mean, the gains we've seen are staggering.
Right, look at Palantir, up something like 2,180% since early 23.
And Nvidia, even more maybe. 1,030%. Just massive.
Exactly. So naturally, investors are asking, okay, where's the next big AI winner?
And attention seems to be turning, interestingly, to a pretty specific niche.
Yeah, this area called Neoclouds. We've already seen one player, CoreWeave.
Right, the Neocloud provider.
They surged, 215% since going public, just back in late March.
Which really highlights that this isn't just theory. There's real momentum building.
Definitely. And that brings us to our focus today, Nebius Group, tickers NBIS.
Another name cropping up in this space.
Yeah, already up 122% since it resumed public trading in mid-October. And, one Wall Street analyst actually called it an unsung hero in AI.
An unsung hero. Okay, intriguing.
So our mission here today is really to kind of pull back the curtain on these neoclouds.
Figure out what they actually are.
What they are, why they're so critical for AI right now.
And specifically, why Nebius might be, a company really poised to benefit.
Exactly. We've sifted through the sources to bring you the key insights.
All right, let's get into it. Neoclouds.
So Neocloud, most people get traditional cloud computing, right?
Yeah.
Accessing servers, storage over the internet.
Standard stuff. AWS, Azure, Google Cloud.
But AI models, especially the big ones, they got incredibly complex, incredibly hungry for a specific kind of power.
Yeah, and that created a gap, a very specialized need within that whole cloud ecosystem.
And that's where these Neoclouds step in.
Right. So connecting it up, Neoclouds basically emerged to fill this specific vital gap for the AI revolution.
Okay, so what makes them different?
In simple terms, a Neocloud is a cloud provider that's deliberately stockpiled the really high-end GPUs.
Graphics processing units.
Exactly. And other specialized gear you need for intense AI number crunching, high-performance computing.
So it's not just general compute, it's tailored hardware.
Totally tailored. Some people even call it GPU as a service or GPU-as.
Yes.
Because it's really just laser focused on those AI workloads.
So this GPU as a service model, it's about delivering that compute power already optimized, ready to go for AI tasks.
Pretty much. Pre-configured, ready to roll. It saves AI companies a ton of hassle compared to setting up generic cloud instances themselves.
Right. Less configuration, faster deployment. And Nebius fits right in here.
That seems to be their whole pitch. According to their website, they offer an AI-centric cloud platform.
Building large, cost-efficient GPU clusters.
To service the explosive growth of the global AI industry. It's a pretty direct statement of intent.
Yeah, no kidding. Explosive growth. And are they actually, delivering on that? What do the numbers look like?
Well, the results they're showing are pretty interesting. First quarter revenue was $55.3 million.
Okay, maybe not a huge absolute number yet.
Right, starting from a smaller base. But that's a 385% increase year over year.
Wow, okay, 385%. That's a significant growth.
And maybe even more impressive, their annualized run rate, ARR, from just their core AI services hit $249 million.
So run rate means if they keep up that pace.
Exactly. If they maintain Q1's pace for a year, they're on track for nearly $250 million just from those AI services.
And that's up how much?
That ARR figure is up a staggering 684% year over year.
684%.
Yeah.
Okay, those growth numbers are definitely eye-popping.
They really are.
But growing that fast, especially with specialized, expensive hardware like GPUs, that must cost a fortune, right?
Huge capital expenditure.
Oh, absolutely. That's the challenge.
What are the key financial hurdles? The sources mentioned they aren't profitable yet.
Precisely. They're in heavy investment mode, scrambling to build out capacity to meet this, frankly, insane demand.
So pouring money into infrastructure.
Yep. They're bringing 3 new locations online just in 2025.
3 new data centers.
Looks like it. And they expect to have 100 megawatts of contracted power capacity by the end of this year. Okay, 100 megawatts. And it's not just about space, it's about the type of gear inside, right? You mentioned specialized hardware.
Crucially, it's about the GPUs. In their Q1 shareholder letter, Nebius specifically mentioned that most of their AI capacity comes from Nvidia's H200 AI chips.
Which are high-performance chips now.
Exactly. And they plan to aggressively integrate NVIDIA's next generation, the Blackwell, Grace Blackwell, and Blackwell Ultra platforms, starting in the second half of 2025.
So they're staying right on the cutting edge of NVIDIA's roadmap.
That seems to be the plan. You have to, really, to serve those most demanding AI customers. It shows a real commitment to having the best, most powerful hardware.
Okay, so this aggressive expansion, new locations, top-tier NVIDIA chips, it definitely looks like they're positioning for some serious future growth.
That's the strategy. Yeah.
And it sounds like Wall Street is starting to pay attention.
It certainly seems so. The sources we looked at indicate that as of July, all 4 analysts covering the stock rated it either a buy or a strong buy.
4 out of 4. That's pretty strong consensus.
It is. And what's maybe more interesting is the consensus price target from those analysts.
Yeah. What are they projecting?
They see potential gains of around 50% compared to a recent closing price.
50% upside. Okay. Any specific analyst calls standing out?
Well, yeah. Goldman Sachs analyst Alexander Duval called Nebius a top pick.
Goldman calling it a top pick. That carries weight.
It does. He initiated coverage with a buy rating and set a price target suggesting 53% upside from where it was then.
53%. So what's Duval's reasoning? Why is he so bullish?
He points to a few things. Nebius's full-stack software, their cost efficiencies, and their ability to operate at scale.
Okay, let's unpack those a bit. Full-stack software. What does that mean in this context?
It means they're not just, renting out bare metal GPUs. They're providing a whole optimized software environment on top of the hardware.
So it's an integrated package. Hardware and software tuned together.
Exactly. And that integration likely leads to the cost efficiencies he mentioned.
What?
Because it streamlines things for the AI developers using their platform. Makes it easier, potentially cheaper, for companies to actually use that powerful GPU infrastructure effectively.
Right. Less friction, maybe faster time to market for the AI companies using them.
Could be. And this whole integrated approach is probably what enables them to operate at scale effectively. It differentiates them from just offering generic compute.
Makes them more of a partner for serious AI work, not just a hardware rental shop.
That seems to be the idea. And Duval clearly believes that the, continued rise of generative AI will keep fueling demand for exactly this kind of specialized service.
It makes sense. But if the potential is so high and analysts are bullish, why the potential undervaluation? Duval mentioned something about valuation compared to rivals, right?
He did. He noted that Nebius trades at an enterprise value-to-sales ratio of about 3.
EV to sales of 3. How does that compare?
Significantly less expensive than its rival CoreWeave. CoreWeave commands a multiple of 5.
Okay, so Nebius is trading at 3 times sales, CoreWeave at 5 times sales. That's quite a gap.
It is. It suggests investors might be, underestimating Nebius's potential relative to its peers.
Why might that be? Any thoughts on market reservations or risks?
Could be a few things. Maybe it's just less well-known, being newer to the public markets again. Or perhaps the market needs more proof of sustained execution given the heavy investment phase.
So, perhaps a bit of a show-me story still, despite the growth.
Possibly. But that valuation gap definitely suggests there might be an opportunity if they keep delivering.
And adding another layer here, there's the Nvidia connection, right?
Oh, yeah, that's quite interesting. Nvidia itself actually owns a stake in Nebius.
Nvidia, the chip maker, they invested directly.
Yep. Nearly 1.2 million shares, valued at roughly $25 million at the time of the report.
Okay, that's more than just a casual investment. What does that signal, do you think?
Well, it feels like a pretty strong strategic vote of confidence, doesn't it?
From the key supplier of the most critical hardware.
Yeah. Nvidia, the leader in GPUs, putting its own money into Nebius. It suggests they see Nebius as a really important partner for actually deploying their chips and scaling AI infrastructure.
Does it mean preferential treatment? Like Nebius getting first dibs on new chips or collaborating on development?
It certainly could. We don't know for sure, but it's a potential significant competitive advantage in a sector where getting the latest hardware fast is absolutely critical.
Definitely something that differentiates them. Okay, so we've covered a lot of ground neoclouds, Nebius's model, the financials, analyst views, valuation, the Nvidia link.
Yeah, quite a bit.
To kind of wrap this up for you, our listener, what's the core takeaway here, if you remember one thing from this deep dive?
I think the main thing is how companies like Nebius, these neoclouds, are filling a really specific, really crucial need.
The need for specialized GPU power.
Exactly, powering this AI revolution. They offer something tailored that the big general cloud providers maybe don't focus on as much.
And the strong analyst view, plus that potential undervaluation compared to rivals.
Right, it makes Nebius and this whole Neocloud space definitely an area worth watching closely.
It really feels like this specialized infrastructure is, as Nebius puts it on their site, the backbone of this explosive growth of the global AI industry.
It really is. It's not just about the algorithms. It's about the physical foundation they run on. You need the engines to power the revolution.
Absolutely. Which leaves us with a final thought to mull over. Given this, almost insatiable demand for AI processing power and how specialized these neoclouds like Nebius are, what does that tell us about the future shape of AI development itself?
That's a great question.
Will access to these powerful, potentially more cost-efficient GPU clusters, will that become the real bottleneck, the main determinant of who innovates fastest in AI?
Or could it even create maybe a new kind of digital divide between those who can afford access to this scale of specialized compute and those who can't?
Something to think about. What does access to this foundational layer really mean for the future of AI?